Hello and welcome to Emsi Webinars. Thank you for joining us today. We have an exciting webinar ahead of us, as usual, with our host, Andy Durman, who is the Emsi's Managing Director. And we also have Duncan Brown, Emsi's Senior Economist, with us today. If you have any questions during the course of the webinar, please put them in the questions box on the control panel, and we will endeavour to get back to them at the end of the presentation. You will be receiving a follow-up email with the recording and the slides from today's presentation, so keep your eyes open for that. So without any further ado, I'll hand over to you, Andy.
Thank you, Debbie, and hello everyone. Hello from a rather miserably rainy Basingstoke. Although it's been a long time since we've had rain, so it's good for the garden. Anyway, thanks so much for joining us today. I'm joined by my esteemed colleague and Emsi's labour market data guru, Duncan Brown. Hi, Duncan.
Hello, you say the nicest things.
You're very welcome. I presume the money is in the post on that one. Yes, so we'll be hearing from Duncan shortly as we dive into some of the latest stats about the state of the labour market. And as the title suggests, we're going to be digging under the surface and really starting to think about what skills we're seeing emerging at this current time. So excited to dive into that. Welcome back, long-term viewers of these webinar series. Thanks a lot for joining us, and great to have you come on the journey with us. And welcome any new viewers, and you're very welcome to this webinar, and all of our webinars from the past can be found on our YouTube channel, and I'm sure Debbie will circulate details down the line. So quick intro, if you are new to us, just a little bit about who we are as Emsi. Well, ultimately our mission is about helping organizations to make better decisions about the labour market through providing good detailed insight about what's happening in the labour market, where it's heading, and how that then can inform the worlds of education, economic development, and ultimately those focused on employment really understand the dynamics at play and how we can help not just our own organizations make better decisions, but ultimately help the communities that we serve better understand how they can prosper in an ever-changing labour market. And of course, part of the process we go through with these webinars is about trying to illuminate what we're seeing from our data and other data sets that really do start to illuminate what is happening at a time where there is a lot of change going on right now. So in terms of today's session, we're building on a theme that's been tracking certainly over the last 12 months or so throughout the pandemic, just how the labour market has been responding and evolving during this time. And we certainly focused last time on really diving into where those green shoots appeared to be in the labour market, and we spent some time diving into what we coined the bounce back economy, the segments of the labour market that actually seem to be really thriving right now as we work through the recent challenges. And so the goal today really is to go further and go deeper around that, and really start to think about, as time goes on, what we can learn about the current labour market conditions. And that's a general theme that we tend to review on a month-to-month basis, because things are changing at a decent pace. So we will kick off by summarising just what we're seeing right now in the labour market, but the prime focus then is to dig into really the weeds of what we're seeing behind that, and understanding actually how we're seeing the skills that employers are seeking changing. And particularly we're going to be looking at the period at the beginning of last year, so pre-pandemic, relative to the first quarter of this year, to see if we can see within a 12-month window what sort of change we're tracking through, and surmise what that might mean going forward. I also, as always, want to point you towards a range of resources that we have that you can access, that will continue to help you in your own journeys and support the communities that you are supporting. So we'll have a chance to review those at the end. So Let's start with the current state of play, and this is where I bring Duncan back into the discussion. And Duncan, you're going to take us through just a few headline trends, some of which long-term viewers will be familiar with, but tracking through the most recent data as we sort of assess the state of the current labour market.
Yeah, thanks, Andy. So let's kick off with the plain old normal labour market statistics that we get from the ONS, which are really important in understanding sort of the underlying state of health of the labour market. And so let's start on the left-hand side here, where we've got the unemployment rate, which is the black line. Then we've got the vacancy rate, which is reported from surveys of businesses that the ONS conducts every month, and that's the purple line. And then the green line is the redundancy rate, so that's the share of redundancies over the total number of people employed. And so what we can see is that actually things are generally taking a turn for the better. Redundancy rate peaked a few months back and is still high, but it's falling fast, and so hopefully in a few months it will be back much lower towards a more normal level if it carries on its current trajectory. The unemployment rate, after rising for some months, has peaked, at least initially. It might come back, we'll have to see, but has seemed to have turned a corner. And then the vacancy rate, after bouncing back some way, has leveled off a bit. And so that's probably the one sort of slightly grey feature on that overall outlook there. But it's worth saying that, if I went back a year ago, by now we were probably expecting unemployment to be 7, 8, 9%, maybe more. And if it was the peak a few months ago, that would be January, and it was around 5%. Well, that's actually a lot better than we thought it was going to be. So that's the first positive thing to take from this. And as I say, there the trends are better. Vacancies have still got some distance to go. Redundancies are coming down, but overall it's not a bad outlook. Worth saying that the unemployment rise has been heavily concentrated among young people, and that's a problem. That's obviously something of interest to a lot of our listeners here today, that young people are finding it harder to get jobs. But it's important to sort of even keep that in perspective. The employment rate of 18 to 24-year-olds is down a few percentage points. It's not huge. It's big enough to be a problem, but it's not a sort of a calamitous fall. It's a much bigger fall among 16 and 17-year-olds. Most 16 and 17-year-olds aren't in the labour market actively. They're not working because most of them are sort of more focused on education. Typically it's around a quarter that are in work, and that's fallen to around sort of it's about the 18% mark, something like that. So that's quite a big fall. It should be said that it's only a 2-year age group, and so that can change quite quickly, because obviously in the space of the last year, half of that age group has been replaced by a new cohort. And the reasons for that are fairly obvious, that a lot of the work that is done by 16 and 17-year-olds tends to be in hospitality, which is, of course, the most affected. It's also worth saying as well that, neither of us have 16 or 17-year-old children in the house, but while there was a pandemic on, we probably wouldn't be encouraging them to go looking for work either. So there may be an element of that in there too. So, it's a problem. It's not, there's still lots of room to get a lot better there, but it's important to keep in mind that overall the labour market is looking a lot more vigorous than we might have had reason to believe a year ago. The more sophisticated chart here is the one on the right, which is what we economists call a Beveridge curve, and that measures the unemployment rate against the vacancy rate over time. And so you can see that for most of our recent history, and this goes back to 2006 goes back to 2006, which is the green area there. It moved along this kind of diagonal line where it trades off, where if you get a lower vacancy rate, that obviously drives the unemployment rate up because there are fewer vacancies for people to get jobs in. And so that 2006 to 2009 green period, is the lead up, and then the financial crisis and recession. And then the black line is the long struggle back, and you'll see that there's quite a sort of a cluster there of the very slow start. And then the blue line is the period from the EU referendum in 2016 to COVID, where on the whole we were probably expecting sort of the labour market would at least not get any better, but may even got a bit worse. And actually it continued to get even tighter. In fact, it got to a lower unemployment level than we'd seen in over 40 years, actually. And then we had COVID, and that's this purple period. And you see that headlong dive in the vacancy rate, where it goes straight down. And it's interesting that it didn't go diagonally. And that was partly because of the speed, but also because of furlough. Furlough stopped people being pushed immediately out into unemployment. Now, over the sort of the past sort of 6 or 7 months, so this data goes up to February this year, you can see that started to turn, and we had this kind of period where vacancies started to creep up again, which is a good sign, and we've talked about that in past webinars, where the labour market has seen some recovery in demand, but that wasn't fast enough to avoid the increase in unemployment, because some businesses just closed down because furlough or not, they couldn't keep going. And so we see that kind of gradual move in unemployment up from around the 4% mark to 5%. But the interesting thing is we've had another turn now, and this is what we saw on the left-hand chart as well, where unemployment has started to come down again, and vacancies are crawling up. So hopefully that trend will continue, and we can start moving back up toward the top left and start making some progress, hopefully towards that blue patch at the top there, which is where we were before. But how long that will take, we'll have to see. Go on to the next one. So as regular viewers will know, one of the big focuses that we've had over the past year is on our job postings data. Job postings are what we scrape from the internet, and we deduplicate and we enrich to give us a sense of what's going on in terms of recruitment demand on an ongoing basis. Its power is its recency, because it tells us what was going on literally a day or two ago. And so what we've got here is a weekly trend of job postings, what we've done is we've taken it from the beginning of January 2020 up until the most recent week. And what you can see is that these black lines that are on there, the vertical one is when the lockdown started, March 23rd, and you can see that job postings were already falling in the weeks before that. It was already, we all knew that something was happening, and so employers started to rein back on their plans. And then after that, it starts to fall precipitately. And that lower black horizontal line is the sort of the minimum point, which was 54%, the average level that we saw in February. So that was the low point. And the top line there is that February level. And you can see that the most recent weeks, we're not quite there. We had a week sort of at the end of March, beginning of March there, which is that really high line, which just touched the February level, but overall we're still creeping back towards it. But we are creeping back there, we are getting sort of close to it, and that's just in spite of the recent lockdown. You can see that lockdown did have an effect, and after Christmas there was a real falling back of demand, but since then it's continued to gather pace. I think the sort of progress on vaccines, the announcement of the roadmap, has kind of given employers some confidence to start recruiting a bit more again. And so if we go on to the next slide, you can see this in terms of some of the changes in occupations that have been driving job posting. So those on the left-hand chart there are the most in-demand occupation based on new job postings in March 2021, and nurses, unsurprisingly there, because they're still really important and they've held up all the way through. But what's interesting is that you've got roles like sales accounts and business development managers, programmers and software development professionals in there, van drivers, investment analysts, and so on. Some of these jobs actually did take a real hit early on in the period, and so actually it's good to see them coming back. It would be good to see it spreading a bit more widely. This chart on the right gives us a view sort of overall in terms of this sort of the across the period, where driving instructors for some reason held up well, and not quite sure why, but bar staff, vets, plasterers, bricklayers, and as we'll see in a moment, the construction period is held up well. There's a blog post on this, I think, on our website.
I was just going to say, on the chart on the right hand side really looks at the difference between the trough in May that you mentioned and certainly March's position in terms of new postings. So driving instructors actually were next to negligible in terms of recruitment activity for many months through various lockdowns. But certainly, as the roadmap was mentioned, it looks like in certainly March there was a big spike. So this isn't having looked into the data, it's not a gradual lift through that time period, but really a spike. I think as that demand is being pent up, and everyone wants to get back to it, and test centers are opening back up again. And you can see that again through bar staff, waiters, restaurant. This is all preparation, I think, it reads as preparation for as the economy opens up. And so employers are starting now to, in effect, announce their hiring intentions as the economy unlocks again.
Yeah, absolutely. So if we go on to the next one. So the other source of data that we have that's a lot more current in terms of the impact of COVID on the economy is furlough. So obviously, pretty quickly after we went into lockdown, the Treasury announced that the furlough scheme was available, coronavirus job retention scheme as it's officially called, and they've been releasing statistics on its usage. And so what we've got here is the trend in furlough, and we've counted it as 100% is the peak level, which you can see was sort of in that May period last year. And we've also put our job postings trend, which is the same as the one that we saw a couple of slides back, and we've counted that as 100% being February last year. And so our ideal place on this chart will be when our job postings are at 100% consistently, or maybe even above it, and furlough is down at 0. Preferably by choice rather than it just ending. And so we can see it's quite an interesting pattern really, because we can see that period sort of during summer into September, October, employers very much moved away from furlough, and job postings really did recover, quite a lot of the ground that they'd lost. They went from being sort of 54% down to being around 20% down as you were in October last year. And then of course things started to change as we went into November. We had the localized lockdown, and then obviously it went downhill from there over the next couple of months. And so you can see that actually job postings held up pretty well until the Christmas period, and then in the new year, the announcement in the national lockdown had a bit of an impact on it, but not anything like taking it back to how it was in the first lockdown. It sort of took about 5 to 10% off, and then it's since started to climb again. And with furlough, you can see that in November it went sort of from around the 25-30% of peak level in October up to about 40% in November, stayed there, and then with the new lockdown went up to about 55%. So again, it's not gone all the way back to how it was. And as we'll go on to see in a moment, there are certain industries which seem to have found a way of working which they hadn't done before, which drives this. But what's really promising again is that job postings trend really picking up. Obviously, furlough data only goes to the end of February at the moment, or it did yesterday. They might have released the table since then. Haven't checked. But we can only surmise that certainly once you get into April, with the opening that's happened in the past few weeks, and then obviously in the next couple of months as the roadmap continues, we should see that furlough number starting to go down. And if you go on to the next slide, we actually have some charts here which really show the story at an industry level. And so here for each of these industries, the black line is the active postings level as a percentage of February 2020, and the green line is the furlough level as a percentage of the whole workforce. And so you can see that there are some industries which barely ever use furlough anyway, and there's not much difference there. So you can pick out an industry like finance and insurance, which is quite interesting. Finance and insurance barely use furlough, but its job postings seem to be most of the way back to where they were in February last year. And then you can pick another one out like construction. And manufacturing is a very similar story, where furlough use was quite widespread. At its height, around half of the construction workforce were furloughed, and job postings had fallen by more than half. And yet you can see that while furloughs come back a bit, it's much more around the sort of 10 or 15% level, while job postings are actually above the level that they were in February last year. And manufacturing, slightly less impressive, but a similar kind of story. So you get that sense there. the ones where we still got these kind of residual issues are the quite predictable ones. So accommodation and food services is the obvious one, hotels, restaurants, pubs, where furlough, which is the green line, at its height was 75%. It's not quite got back to that high level. It's around 50% now, but it's still half the workforce. And obviously that's the line to watch over the coming months. And job postings, again, are still more than 50% below their level before COVID. Arts, entertainment and recreation, a similar story, and other service activities too. You'd hope that other service activities, a big part of which is hairdressing and beauty treatments, will start to come back a bit quicker than accommodation and food services and arts, entertainment and recreation. And so that might be a good early warning of how recovery is going in the next couple of months. But yeah, overall, most sectors do look like they're coming back quite smartly, but it's just these ones that require that physical proximity where we expect a problem, and indeed there still is.
Great, thank you, Duncan. That's really helpful, and not only just good general context and hopefully useful for you guys listening in today, but actually sets the scene as we then pose the question around how is what we're seeing affecting demand for different skills in the labour market, and that's obviously a really important question to think about how well placed that displaced workforce might be to take advantage of new opportunities, as well as thinking about new entrants to the labour market coming in through the education system and opportunities there, as well as, of course, thinking about helping individuals themselves navigate the circumstances and situations affecting their business and their opportunities. And of course, having that context of understanding which sectors seem to be returning and thriving versus which ones are continue to be challenged, of course, will influence the nature of the sorts of roles that are in demand, as we saw earlier in that big shift happening in recent months. And of course, all of that then influences the skills mix in the active labour market. So this next section is really for us to dive in and summarize that a little bit. And I'd like to bring you back in again, Duncan, to, I suppose, before we get into the nitty-gritty of the data, actually just give us a little context as to how we've pondered this question and the kind of methodology that we've applied that will drive the data we see in a moment.
Yeah, so what we've done first of all is split the labour market up into 4 categories. So actually go on to the first slide, because that kind of helps to set the scene. So we've got these 4 categories. So high skilled jobs are all those in major groups 1, 2 and 3 of the ONS standard occupation category to classification, to use the technical term, but that's managers, directors, professionals, and associate professional and technical roles. So it's kind of, most graduate jobs are in this field. You've got lots of high-level technician roles. You've got doctors. You've got nurses. You've got lawyers, economists even. So these are the sort of the jobs that a lot of them have been more able to be worked from home, and so it's not unsurprising that these are the job posting trends on the weekly basis again since the start of 2020. And you can see there that they were, they've recovered pretty well. They're back up to February's level. Then we've got this second group on the top right, which is the middle skill group. Now this is quite a mix because you've got admin and secretarial jobs, but you've also got the skilled trades, so plumbers, electricians, builders, sort of shop floor engineers, those kind of roles. Then on the bottom row we have 2 generally lower skill, although not always low skill, groups of jobs. So on the service oriented side we've got a mix of care jobs, which have obviously held up quite well, but we've also got things like retail assistants, leisure jobs, low-end sales jobs as well. So a lot of those have been quite significantly affected. And then the final category there is the labour intensive one, which is a range of jobs in terms of factory jobs, but also things like people who work in warehouses, road sweepers, people who serve at a bar, all those kind of ones where actually the work is predominantly physical in nature. And so what you can see just as background here is that the labour market has affected them in different ways. As I said earlier, the high skill trend has held up pretty well. It's the largest category, and so actually it's broadly reflective of the wider trend that we've just been looking at. The middle skill one is probably the worst affected at its nadir. It was 69% down on its February level, so more than 2/3 of recruitment demand was lost. It's since recovered a long way, but it's still, something like 15-20% down on February's level last year. Service-oriented jobs, as I said earlier, quite a mix because you've got sales and retail type jobs in there, but you've also got care jobs. So they were less affected at first, but the recovery has been a little bit sluggish, and that reflects that mix. And then labour-intensive jobs is probably the most rollercoastery one, because at one point in the autumn last year, it was well above February's level, and it's since recovered to about February's level after a dip in the meantime. I think warehouse jobs will be an important part of that because they have been booming. But what we wanted to do for each of these 4 categories was look at the skills that have been rising in demand and declining in demand. And that's not as easy as it might seem, because normally we're used to job postings being either relatively stable or gently growing. Whereas, of course, over the last year, we have had a bit of a roller coaster, where for a period across the whole labour market, they were more than a half down. And so what we wanted to do was just have a test of labour market demand for different skills that would withstand that kind of volatility. And so what we looked at was the share of job postings. So for all the high skilled jobs, we looked at the leading skills, the top 1,000 of them, and we looked at the share of job postings for that skill in the first quarter of 2020, so mostly before COVID, and then the share of job postings for that skill in the first quarter of this year. And we looked at the percentage points change, as we call it. So we just subtracted the share of this quarter from the share in last quarter. Now, what that means is that because we've got fewer postings this quarter, it means it's a test of how much the demand has moved in relative terms, because it's entirely possible that during that period, a skill has got the same level of demand in terms of the actual number of jobs that it's attached to. But if you've got fewer postings in the first quarter of this year compared to last year, that means its share will have increased. And that's what we want to take account of, that we want to get a sense of what skills are really driving demand now compared to then. We want to get a sense of how it's changed. If we just looked at the fastest growing ones, what you'd actually find is a lot of small skills, predominantly in the health and care sector, would have come up a long way because they've grown. They might be quite small, but they've grown a little bit. And that's misleading, because actually a skill that's quite widespread and has actually really held on, hasn't grown fast or maybe even at all, but has held on while job postings for other skills have declined, is actually more interesting to us. So,
yeah, thanks. Yeah. So what we're going to do is, having then thought about these categories and that methodology, we're going to first look in each of those groups to see where the greatest negative shift has occurred before we then switch gears and obviously, in the spirit of positivity, then actually look at where things have grown significantly. So this first slide, Duncan.
Yeah, absolutely. So what you see here is how badly the restaurant sector has been hit. So you can see that they're all on the same scale, these charts. And so restaurant operation is 1 percentage point down as a skill in labour intensive, and 3/4 percentage point down in middle skill job postings. Now that doesn't sound a lot, but bearing in mind that most jobs aren't in restaurants and never were. And so actually, whereas before there were several percentage points of job postings with restaurants in the labour intensive category, because you've got waiters and waitresses there, I think it was about 1.5% or something like that. Most of that has disappeared. And so you can see that that's just the seismic change that has happened. The other skills that you can see there also follow a bit of a pattern across most of the different areas, really. So you can see a lot of commercial skills have disappeared. So, relatively speaking, in terms of recruitment demand, you can see fundraising, sales management, selling techniques, telemarketing in high skill. You can also see resourcing has fallen, because actually, as we're looking at, recruitment demand fell off a long way. So, if you're in the human resources business, it's not been the most buoyant time for a resourcing position. You can also see more effects of restaurant operation at high skill level. You can see cooking has fallen at middle skill level where chefs are, and you can also see where the other cooking roles have fallen in labour intensive as well. You can see some other effects here. So one of the interesting ones for me are things like classroom management falling in high skill. So teachers fall under high skill, and obviously for a large part of the last year, classroom management hasn't been the biggest concern for schools, because a lot of the time they haven't been actually in the class, and so the demands have changed. And so yeah, quite an interesting set of skills at the middle skill level, where you've got these kind of more administrative jobs. A lot of the financial skills have declined in importance. It's not that they're still not being used, it's that new staff aren't being sought so much because belts have been tightened generally. And again, food preparation is down there as well. And then in the service oriented category, and this is where the sort of the care sector kicks in a lot, you see things like cash handling, selling techniques, visual merchandising, leisure and recreation, all down for pretty self-explanatory reasons. And,
and anyone who's been out buying things, obviously there is a preference in this cleanliness world of moving away from cash and moving to card transactions.
Yeah, absolutely, yeah. That's right. That's a really good point.
Yeah, and a reminder, these are skills that we are seeing being actively mentioned when employers are going out to recruit. So it doesn't mean these skills are dead per se, but simply not at the forefront of an employer's mind when they're thinking about what they're looking for in candidates to fill vacancies. So
absolutely. So that's something always to bear in mind with job postings, and that's why at Emsi we always put job postings alongside structural measures of the labour market, because actually they're a look at the sort of the marginal frontier of labour market demand. So it's changing all the time, labour market demand, and so actually most jobs aren't changing hands from one year to the next. And so, yeah, it's not to say when we see bank reconciliation and accounts payable falling in the middle skill category and credit control that these things aren't important at those jobs. It means that employers aren't hiring for them. And I think a lot of this actually relates to belt tightening with a lot of the commercial roles. It's not that salespeople have been losing their jobs en masse. It's that with the outlook for the economy as it's been for most of the last year, and it's now picking up quite rapidly, which is great. But if you go back to the second quarter of last year, I mean, speaking for ourselves as a business, we had no idea what business prospects were going to be like by now. Actually, for us, as for most businesses, it's been a long way from the worst case scenarios that we had in mind then. But for a large part of last year, people went into very cautious mode. They started to think, actually, we're not sure whether we should be taking on more people. They started to think, well, do we want to take on more people in HR or finance when our business might be smaller in the future? And so even though there's furlough to help you through these times, it doesn't mean that you're going to maintain your recruitment pattern, and you'll focus recruitment on where you've got the most acute skills needs. And if say you lost one of your financial administrators, you might just say, well, actually, we'll pocket the wage cost of that person for the time being, and then if business picks up in the future, then we'll hire at that point. But in the meantime, we'll just make do without. And so that's what's going on with job postings. And that's always good advice, to always remember that job postings are looking at the sort of the marginal change in the labour market demand and not the whole of it.
Yeah, thanks, Duncan. And we're obviously looking at the negative side, and I think it does paint a very interesting picture. But I think actually, as we come on to now look at what's emerging, what's growing, that's where actually the real interesting insights lie, and that's where ultimately I think the action lies. I think these charts that we see in front of us tell the story that we've been telling throughout. I think as we move on to the next slide, this is where we can really start to think about what might this mean for individuals finding their way through the labour market to new opportunities. So let's go on to that one then.
Yeah, absolutely. So yeah, I mean, I think this is where it gets a lot more interesting, because in some ways, some of the declines are quite predictable, especially around restaurants and food. Some of these increases are quite predictable in another way, because PPE is one of the most increasingly mentioned skills across 3 of our 4 categories here. Middle skill, service oriented and labour intensive. PPE is either first or second in each case. And that's for reasons that we've all come to know and well, not love, but accept as a part of life. And a really fascinating story that's going on in this chart is on the top left in the high skill one, where it's the skills around technology, digital technology, that are actually booming. So agile methodology there, Amazon Web Services and Microsoft Azure, digital marketing, data analysis, automation, cybersecurity, project management, which can be a wider category, but also has a big implication in terms of digital, Python programming language, and software as a service. So this is the boom in all those online services that we've come to use a lot more in this past year. The explosion in e-commerce usage and online shopping delivery. You can really see that writ large there, and even different aspects of it, things like digital marketing. Well, before, a lot of businesses would be having digital marketing as part of a wider mix with events and with in-person sales representatives. Well, when you can't actually meet people so easily, when you can't hold events so easily, digital marketing becomes a way of using some of the money that you've been saving on those things to get the message out to people and find other ways to that market. So that's a really fascinating story all going on in that high skill block there. And then in the middle skill one, it's interesting that while some of the more administrative financial tasks have declined, some of the more analytical ones have increased. So accounting, budgeting, management accounting, and also some of the skilled trades are also picking up there as well, carpentry, boilers, plumbing. And as I said, this doesn't necessarily mean that they're any higher than they were before. It means that they haven't fallen while others have. And so that's quite an interesting dimension here. And of course, cash flow is also an interesting one there. And public liability, of course, because all of a sudden the risks involved in running businesses have changed quite dramatically. On the service-oriented ones, it's pretty predictable in many ways that care dominates it. So you see there personal care, nursing skill, meal planning and preparation, probably also part of that, mental health, child protection, and so on. And then on that bottom right in labour intensive, we can see the boom in logistics, which is part and parcel of that sort of growth in online services. That, of course, when we buy things from Amazon and when we buy groceries to be delivered to us, that has huge implications for our economy in terms of warehousing and managing that sort of storage and movement of goods. And so you can see that writ large through there between palletising, forklift trucks, warehousing, and so on. And so real sort of strong stories there, sort of digital at the high skill, care at service oriented, and logistics in labour intensive, and more of a mix in the middle skill category. There's some really strong patterns coming through.
Yeah, interesting, and just struck me as I was looking at the previous slide as well. Your point about digital marketing is really interesting in that telemarketing has been one of those skills that we've seen drop off. So there's a story about a shift in engagement approach, particularly within a business setting there.
Exactly.
The other thing,
it's difficult to get to people. I mean, digital marketing allows you to get to people by where they go online, whereas telemarketing requires you to find them, which when they're working from home is a lot more difficult.
Yes, absolutely. The other thing that just struck me as you were describing the middle skill dimension, and particularly on the financial components moving towards more of the analytical dimensions. If I might join a few strands together, and this is a relatively old strand for us, but the work we did through the AutoNation report, where we looked at it feels a long time ago now, but where we looked into understanding the task share across different roles, particularly with exposure to automation in mind. And a lot of the discussion there was around dividing the labour market up into the physical activities, as you've been describing them, particularly in those labour-intensive arenas there, which are highly exposed to automation. But those slightly more human traits of interpersonal skills and analytical skills, and a big discussion I think bubbling along, and we've certainly had internally here, is thinking about is COVID the big enabler and the jolt that our economy has needed to largely head along the path that the automation agenda has been and the discussion has been. And so, yeah, very interesting to see some of that playing out. Of course, it reminds me when we're looking at these, we're only looking at the headlines here, and what we're not seeing within the Emsi skills library, for those that aren't familiar, and this is the skills language that you're seeing in front of you, we do subdivide skills into technical skills and common skills, as we call them. So they tend to be those interpersonal skills. Now, remind me, Duncan, did we remove the common skills from this analysis, or is it just the nature of the fact that common skills are so common that they don't tend to shift around so much as the technical skills?
Yeah, we did focus on the technical skills, but that you are correct anyway, that they do tend to be fairly sort of more ubiquitous anyway, the common skills. I think that from when we've looked at it in the past, you can see that certain common skills have become more and less important in the past year. I think things around communication, for example, have become more important for obvious reasons, that you've got a lot more people working apart from each other. But yeah, we focus this here on the technical skills.
Cool, thank you very much. Interesting. So let's just summarize then just some of these trends. I think it's a good chance to reflect on what we've heard today. So as we work through, I think the great signs as we're reading in the data, and of course there is of course challenge out there that needs to be worked through, but perhaps that challenge isn't quite as many feared at the outset of this period. And actually we're starting to see some good early signs of our economy finding its way back to some degree of strength, which is great. But of course, there are winners and losers in this, and part of, I think, the big challenge we need to work through as a country is managing the shifts that are presenting. So the headlines are exciting, but as we've seen, as we've dug in deeper, there are clearly areas that are still challenged, and the big question and the big unknown is will they remain challenged even as the economy opens up because of structural and social change, or actually is it just a case of they're taking a bit longer to come back, but we'll get there. And that is clearly playing out in what we've just seen at the skills level. So we've seen those skills associated with those challenged parts of the economy still really sluggish. Yet on the positive side, there are certain elements like the PPE that are, of course, have become foundational to the reopening of those bits of the economy that have reopened. And we're seeing that kind of shift in the way business works as well. Now, the interesting question, these are clearly short-term shifts. How much of these are just short-term versus how much might stick as just the new way of working? And I think certainly as we look to skills associated with business development, that online presence, a sense of probably pessimism that held things back, but also throughout thinking about the change in working practices and working locations, and therefore having to reach audiences in very different ways, as you were describing. But I think very interesting as well is maybe thinking about what we might be seeing in this data that hints towards the longer term. We're seeing those strengthening of the IT and automation skills that is perhaps pointing towards the new ways in which we're working and that we're living, we're consuming, those sorts of things. Mental health and child protection skills came through strong, now obviously associated with care, but again, is that our way of adapting to a new way of living? And we're hearing certainly on the mental health agenda significantly more in media and in common discourse now than perhaps we ever have done. And so this is maybe shining a light for that the economy is adapting to. And as you picked out, Duncan, warehousing and distribution skills pretty much holding up that low end labor intensive end of the labor market. And so is that going to dominate forevermore because of changing consumer behavior? or is that just of now? My sense would be that this is quite a significant shift that's been happening anyway, and this has been a big jolt further in that direction. Do you have any other points to summarize?
Yeah, I think so. I mean, I'd agree with obviously all of that. I think that the question is how much sticks, as much as anything, because a lot of these trends, as you say, are kind of prevailing trends that were happening anyway, and we just leapt forward a few years in one. So that puts us ahead of things. Might that mean that we either sort of drift back a bit, or that we don't go, or we have really slow progress for a period, or does it just mean we've made up a few years and we'll carry on from here as normal? And that's the question with a lot of these. It's like, the online shopping thing is quite interesting. Online grocery retail is bigger in the UK and has been since before COVID than basically any country in the world. We're a bit of a global leader in that, helped by being a relatively small country geographically, of course. Now, obviously, that's moved on a huge way because we didn't want to have to go to supermarkets if we could avoid it when there's a pandemic on. But it's also made a lot easier when there's a lockdown, because you don't really have to worry about when you're booking your shopping for, because you're going to be in most of the time anyway. When life returns to normal, which hopefully it will persistently in the not too distant future, we're all busy again, and it becomes easier to sometimes go to a supermarket than book a shopping delivery, because you don't know where you're going to be one day to the next. And so it's that kind of uncertainty about how much of this sticks and how much of it reverts that is really going to be the sort of the important thing to bear in mind. And of course, another dimension on that will be over the coming months, how much people begin to feel confident that we're past COVID, versus that we've got a temporary hiatus. If there's continuing news stories about new variants and them getting into the country and things like that, and there's a feeling that we may have a good summer, but maybe in the autumn things might go back again, that will make the changes stickier than they might have been. And that's got good and bad effects all the way around. Some of these changes could be quite good for economy and society, as well as some of them being negative, but it also has implications in terms of that business pessimism dimension too. If the feeling in the summer is that things are going great now, but that might only be temporary, then that will ultimately provide a bit of a limit to business ambition. It will be a bit sort of, we're going to make sure we're staffed to cover the current demand, but will we be investing for the future when it remains uncertain? And so there remains that kind of potential grey cloud on the lots of silver linings that we generally have at the moment, really.
Yeah, thank you. Well, I suggest on your online grocery example, maybe we should train our lockdown pets to answer to keep the cheaper delivery slots available to us. Maybe.
Absolutely.
Good. Well, thank you very much, and some really interesting points. And I really hope for you guys listening in that there's some interesting tidbits to take away and to think about and to look into. It is at this point I do want to remind you, of course, the reason we are showcasing all of this is to really flag up that we are here to help. We sit on a wealth of insight. We're delighted to share some of those kind of key headlines, but ultimately there's a lot in there, and of course one of the big things is we're here as a business to help you guys as you work through in your more focused areas of work and the communities that you serve. And so we've painted a big picture for you. This does vary greatly, and we've talked about this over the years of how there is no such thing as the UK economy, and that really every locality has a slightly different flavor of opportunity and challenge based on the underlying labor market. And so it's our view that for you in your local area to really drive good decisions and to influence positive change, you need good information about your local area and get your flavor of what we've been discussing. So we have a range of tools and expertise, as hopefully we're displaying to you, that can really help you, and we'd be delighted to hear if we're not already working with you, Delighted to hear from you to see how we can support you, and we can illuminate what services we do have at your disposal. For those who are already customers, of course, we have our army of account managers here at your disposal to help you as you navigate your way through and think about your own challenges. And so we're delighted to support you through those. So please do check out our website, do get in touch. We'd love to talk to you and hear from you. A reminder that last time, as certainly with the theme that we've dug into around skills, the last time we announced a really exciting initiative around our UK skills match solution that we've made freely available for people to utilize. And I think really thinking about the analysis that we've seen there, the big question, of course, for those that are facing disruption in the labour market is pondering, well, where can I go next? Where's my opportunity? And it's our belief as we dig into the kind of analysis we have in understanding the labour market in skill terms is that we want to help individuals ultimately understand the skills they've developed through their own journey in education and in work and experience there, and we want to then help people map those into the skills that are in demand in the labour market, whether that's in the field of expertise that they are familiar with, or hopefully illuminating new areas that require some of the skills that they already have. And so if you're engaged with supporting individuals, particularly those working, those facing disruption from work, we'd encourage you to check out our skills match tool. Visit the skills.emsydata.co.uk site to learn a bit more about Emsi Skills, but to sign up for your free access there. And we're really excited to hear how useful that might be to you as you help individuals work through challenging times. So hopefully a lot of what we've heard here in terms of the headlines of where those trends are going can really inform your work in that environment. I'd also encourage you, we referenced one of the recent blog articles. I encourage you to keep an eye over our blog, and you can sign up to access updates from the blog, continuing to put content out, examples, good case studies as well. So be sure to check that out and sign up, and hopefully keep on top of the latest analysis that we're sharing as well. And we also have a few more webinars coming up. So Duncan and I will be coming back together as we continue to think about the skills-led recovery theme that we're working through. Next month, back end of May, we're going to be thinking about not just what we're seeing in terms of skills demand, but actually looking at what we can learn about education to supply coming through the education system to see how that aligns to where the economy is going. So that should be a fascinating insight as to kind of thinking about the role that education is currently playing in serving the demand for new roles in the labour market there. So another dimension to consider. And our colleagues in the further education biz team have a couple of great webinars coming up. Fantastic case study from a very proactive and long-standing college, Heart of Worcestershire College, and they will be sharing just their experiences of how they've been utilising Emsi labour market data to shape a whole range of fascinating activities at the college, and really influencing their direction of travel to ensure that they're connected into employer demand and giving their students the best chance of engaging in great local careers. And also thinking strategically, a lot of change happening in further education, as isn't there always, but lots going on. A fantastic opportunity certainly for the further education sector to really serve communities at this challenging time, where there is great opportunity, and this sector is well placed to meet the needs and the challenges. And so our team will be talking a lot about their experiences, what they're seeing in the sector, and how we feel that we can be supporting the sector to really embrace the opportunity and to help their communities navigate some of the shifts that we've been talking about today. Debbie, we have 5 more minutes before we're due to finish. I wondered if there were any kind of burning questions, killer questions that were worth raising before we say goodbye.
Not really. There's one which is quite interesting, which is asking whether the skills trend data that we have is only from the UK, and obviously we have more of a global picture as well. So I don't know if you wanted to just address that, Andy.
Yeah, sure. So we obviously have been focusing on the UK for the reasons that that's where we are right now and where we're talking to you from. For those of you that are not so familiar with Emsi, you may not know that we're actually headquartered and were founded in the United States, out in Idaho. So we have sorts of data that we've been exploring here, very much covering North America, and some interesting trends emerging there, and actually more and more so harnessing big data sets like online professional profiles and online job postings globally, and bringing the Emsi skills language that we've been using today through into those posting trends as well. So we do have elements of data that can talk to international trends as much as deeply into UK trends.
Okay, interesting, good. And then just somebody made an observation about the career development skills, because they seem to have gone down quite a bit in one of the earlier charts. Why do you think that's the case? So with career development skills seem to have gone down quite a bit. Why do you think that's the case? The result is surprising given the context, as people are being forced to change occupations and might seek that sort of support. Any ideas on that one?
Because this is about people being hired in job postings. It's not about the support that people are being offered in their workplaces. So are companies going around hiring people with those kinds of skills or offering career development opportunities in them? They're probably talking about other things instead. Doesn't mean, just a lot like what we were talking about earlier in terms of, bank reconciliation skills have gone down in job postings. It doesn't mean that there's less bank reconciliation going on. It just means that employers, when they're looking to hire people, are less interested in those things.
Great, thank you for clarifying that, Duncan. That's all the questions, Andy.
Great, well, thank you very much. Thank you everyone for joining us, and please do join us next month as we continue this theme. And we'll also be talking next month about some really interesting content we'll be bringing through the coming months as we continue to focus on where the opportunities in the labour market lie. I won't steal the thunder of next month's sneak preview on that one, but I think it will be very well received and hopefully very insightful for you over the coming months. So tune in next month to hear how we're understanding the education supply and how that's aligning into how the demand change, employer demand landscape is changing, and then we'll talk to you a bit more about where we're going from there. So exciting content coming down the line for sure. And thank you so much everyone for joining us. Debbie, I'll leave you to close up.
That's great. Thank you very much. Take care. Bye-bye.